Hello, everybody. It's 8:02 a.m. Chicago time on Tuesday, the 18th of December, 2018. Thanks for joining me again and again and again and again for another Trader Bite as we look at how things are shaping up before the market so we can have a plan for when it actually opens. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The sentiment this morning, as you probably already know, is the market is retracing some of the equity index loss it took yesterday. We are trading higher. The Dow Jones is up 137 points on the futures, up 0.6%. The S&P is up 14 points, 0.55%, and the Nasdaq's up 36 points, 0.55% as well. The loser today is crude. Trading at 49.12 on the February. Should be trading February crude now. 49.08 down $1.13 or 2.25%. And crude has actually made a recovery. It was down as much as $48.13 overnight. Just not getting a break for those guys, despite their meeting in Vienna and so on. So that's how things are shaping up. Crude is off. The Euro stocks 50 are off amazingly, down 9 points. This morning, where are we? This morning, it looks like the Italian issues come up for Europe. We have the Brexit issue. There will be a parliamentary debate on the deal, which would resume January 7th, and there's just quite a bit to deal with in Europe. In the U.S., we have this budget crisis. The federal budget is being held for some border wall money that the president wants. So Congress is looking at a stopgap spending bill that would go deeper into 2019, kind of patch things up. So I don't know what's what here, but the fact is the market's been selling off. We've broken out of balance. We'll look at that in just a bit. Looking ahead at today, we already had housing starts, building permits. We just don't have anything left on the calendar. As far as I can see this morning, we got German IFO, and we don't have any speakers either. Just very quiet week on the calendar. Let's take a look at what we expected yesterday versus what we got. Here's our review segment. Yesterday, the primary scenario is that the market is likely, it was opening in a gap below, a small gap below the Friday's range, and the expectation is for responsive buying to take us back into the Friday's point of control. And if it pushes through, looking at 2609, 2610, those of you who were here yesterday heard that. And then I was looking for an impulse down that takes us back down into the 2566 area. That was the primary scenario. It didn't go deep enough, though. Here's what actually happened. Oops, excuse me. Got to sneeze. So here's what actually happened. We push right back to the point of control to the prior day's close. And then we do get the impulse out, and we push all the way down to 33. Again, my expectations for the sell side were smaller than what was there. I had looked for 25.66 as a target. But scenario one was what played out: responsive buying into the prior day's point of control, close, and sell off. And I was willing to go as high as 10. Excuse me. Of all the times of the day that I can have a sneezing fit, I got to have it now. So 26.10. Keep an eye on that 26.10 on the way up. This morning, we're trading right in the low volume node. Oh, excuse me. This morning, yeah, we're trading right in yesterday's low volume node. Multi-screen. I don't get it. So we've pulled back to yesterday's low volume node here, and we're trading right in there. Let's take a look at the overnight. Here's the overnight. The overnight has been almost completely sideways until we broke out just a few moments ago, about an hour ago, actually a couple hours ago. So we've been sideways in the overnight session. The volume is relatively strong. The volume's relatively strong. We've broken out. We've pulled back to the 25.69 that we put in as a high in the overnight session. And we're holding above mid, above VWAP, above the big balance area. The market really liked these prices between 25.68, 69 down to 25.55 and has pushed to the top side. The delta is showing, well, got to be careful with the delta this week, but the delta is showing pretty good participation on the upside. Overnight inventory is mostly long, and we are pulling into this upper distribution from yesterday. The market is separated right here, right where we are now at 25.71. The two distributions are separated. This, of course, I'm looking at as a bounce from selling, rather than new initiating action. Yesterday afternoon on this push down, in Convergence had Trader Channel, I had talked about keeping an eye on how this is behaving as the market was pushing lower. We can see that there was quite a bit of lifting going on the way down. It was negating what would normally look like strong selling delta, and you could see here. I don't trade delta divergences in this way, but you can see as the market made new lows, you could see it in the volume scope. You can see it in the order flow. You could see them lifting on this push down, which then resulted in this spring up into the close. The close was pretty aggressively bought. You could see it right here. This bar and the delta associated with this bar, just very aggressive buying into the close, and that could be just some short covering into the end of the session to avoid margin calls or whatever. And it just didn't look like initiative buying to me just yet. It backed off quite quickly. And so you see this delta pushing really quick and becoming positive, despite the fact that we are just in price, just ages away from being at the zero line, the equivalent zero line on the delta. Remember, the delta starts at zero on the opening print, which was 25.93, and here it is going positive at 25.40. So just to me, it looks like it was a little overdone, and there was some covering going on into the close. but it was really in the way I see things. And remember, the market can be traded in many different ways. There is no right or wrong way. Don't listen to anybody on Twitter or whatever who is making disparaging remarks on how someone else is trading. I feel like when somebody does that, it shows that they really aren't aware of how this thing really works. There are many, many ways to make money and to lose money in the market. And what I'm showing you here is just one way. And so to me, this does look like it's springing up. It's pushing. It has pushed back in the overnight session more on a bounce, on relief of selling than it is on new initiative buying. Just because we're opening up today doesn't mean anything. What we need to see. So that brings up the question: what do we need to see? We need to reverse the one-time framing down for one. So we need to see buyers attack this high 2605.50 from yesterday. So that's one. That's the first shot across the bow. Push through and take over a point where selling took place. So we can so that would be the first. And then once it takes over, we want to see the quality of the pullback. And then we would want to see a real squeeze, meaning an impulse, a strong impulse higher. And then at that point, see, most people think, okay, we took out the high, so now I'm going to get long, and maybe that works for you in your time frame. Remember, the time frame and the way you manage a trade have a huge impact, much more impact than in many cases than the technicals you're using to enter a trade or to create a setup. The way you manage it can make a huge difference as to how profitable or how unprofitable something is. But breaking the high doesn't mean much to me. It is the inability for sellers to step in and take it right back. And then what happens is those sellers, whatever effort they made to bring it back, ends up getting squeezed, giving us the evidence we need to see that buyers are stepping back in. Now, that's a lot of price risk to do that, but we're talking about a reversal that may occur in a day's time period. Which, being a day trader, that leaves me with a lot of information that I can use then for the ensuing sessions. So that's where we are. To see things in the bigger picture, I like to go back to this chart. So we have squeezed the low for the year in the futures, 25.48 on the adjusted contract versus 25.33.50. We pushed the SPX low by about 2 points before the bounce. But most importantly, we've broken out of this balance action here. So last time we poked in, you see that poke, big wick on that candlestick there, and it ended up finishing strong, positive. So this was a probe and a pullback. And then now what we've done is we've genuinely pushed through. We've broken through on a negative bar and finished below. And so the big thing we've done yesterday is we have broken out of this MC, this microcomposite area. And so the question becomes, okay, so once we get back above, remember 2609, it's 2607 is the prior low. Once we get above, do we get a quick flush or a spike through here, or do we poke in and then continue lower to challenge this low? We've been in balance now for quite some time, since mid-October. Let's see when this starts. So October 11th, we've been in balance for quite some time. In this balance range, we've had tremendous range. So you can see the range. This is the day range. These bars here are the day range. You can see how low they are compared to where they are now. We have more than 2.5 times increased our daily range versus a year ago. So you have to account for that in your risk and your targets. But overall, we've broken below, and the market looks terribly weak. However, markets don't just break and continue and continue. Of course, they do if you have a real estate bubble that's bursting, Lehman Brothers, Bear Stearns, or if you have a dot-com bubble that bursts, and so on and so forth. That leads to the kind of movement we saw in October and in February. But a normal market sell-off is really embattled, right? It moves down, then it jiggles, and it moves up, and it looks like it's done, then it moves down, and that's what we've seen over the last 2 months or so. So we're also coming into the end of the year. This is when people expect the Santa Claus rally, and it's not doing that. So there's money that's got to be shifted to compensate for the risk. There are a lot of unknowns with this trade war nonsense that's going on. It's introducing a lot into the equation that the market has to price in, and so that with the Fed tightening up a little bit and so on and so forth leads to what we have today, I would guess. But this I'm not an analyst, but this run has been really, really long. So what are we looking at for what are we looking for today? So today it's really about the fact that we are trading. We're likely to have a rest day. We ran yesterday. We had a neutral extreme close, not as extreme as closing at the low with the point of control near lows, but we've pushed through the high yesterday. We became responsive. We pushed into the point of control. We sold off. We rejected these accepted prices from Friday, and we sold straight off and closed outside of the IB. That's a definition of a neutral extreme. Again, we are at the over underline, right at mid, right at the low volume node, at the IB low. So a tricky area to open at. And so we also have an elongated profile. We've got 70 some odd points in yesterday's range. We are likely to hold steady. We have the FOMC tomorrow. The FOMC is all there is now. We just have to listen to what Fed Chair Powell has to say and what the decision was from that committee. And we are likely to be stuck in today's range. I'm not expecting us to break out of today's range. I'm expecting an open auction in range. I'm looking for this to rebalance, to respond to where we were yesterday, come back down into that 25.50 area, into the point of control, consolidate in here, and then balance back up, move back up, and hold steady in here. Now, that's not much range. It's about 20 or 30 points of range. It may push a little bit higher before it sells off or whatever. It may start out this way and then sell off and then become responsive. Who knows? But overall, I'm not expecting it to go out of the prior day's range. We are opening in range, so I'm not expecting too much of a drive or a drive at all. And so the secondary is that we do get responsive. We balance things out. We impulse up, so we don't actually tackle the overnight low. We impulse up, start pushing through, and this would be fed by shorts getting squeezed out, smaller shorts getting squeezed out, and then we start to look higher. I'm expecting it to go as high as this 25.93 area, the open area from yesterday, before it pulls back and also goes sideways. Now, the ideal situation for a day trader is that neither one of these work, right? We get an open test drive or an open drive or something that is really surprising to the market. That's what we would want to see. But these are the two key ideas. I don't expect us to breach any of the high or the low today. But if it does, it's probably going to result in a loss. and then a better opportunity to make a gain, in my opinion. So that's where we are. I'll let you go. It's been going a long time. Good luck today, and I'll catch you tomorrow, FOMC Day. Also, a reminder, Friday, I will not be here. I'll be traveling through Christmas, and I'll be back on Wednesday morning with the next Trader Bite. So tomorrow and Thursday will be my last broadcast before Christmas, and then I'll come back next week. Good luck, everyone.